Happy Friday, traders. It is Friday, June 6th, 2014. It's 8:01 a.m. Chicago time. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight. A lot of commentary from ECB members, ECB's Nawatny, ECB's Constancio. There's not too much there. Excuse me a second. I need to turn this off. Okay. Other than that, UK April trade balance widens more than expected, negative 2.54 billion pounds versus negative 1.5 billion. Bank of America are in talks about a possible $12 billion settlement with U.S. authorities if you trade the financial markets or if you're watching the XLF. That may be a significant play today. And then, of course, non-farm payrolls came out about a half hour ago at 217,000 versus 215,000, 6.3% versus 6.4% unemployment. Looking ahead, 9 o'clock U.S. consumer credit expected at 15.0, and then pretty much a very quiet afternoon for the rest of the day. So as we head into the weekend, let's take a quick look at our charts. So what we did yesterday was very interesting, to say the least. But the rundown of yesterday was it opened out of range, so we can see that better in the bigger chart. Right here, we opened out of range, the opening print at 1928 even, prior day's high 1927 even. It immediately tested 1926.75, putting that in as the opening swing low, pushed higher to 29.50, back to the open, again 29.50, tried to auction higher, did not, put in a poor high at the moment. Then it fell back into Wednesday's range, taking out the point of control, which was at the high, as well as the closing print at 25.75. Bounce again into the opening swing. It looked like the opening swing high, which was a weak high, also was about to be taken out, given that it tested into yesterday's range and found buyers. The expectation here was a higher push. Again, as I had indicated, towards the targets I had outlined yesterday. Yesterday's hypothesis, I expected early responsive selling towards 1926. That's the primary hypothesis. Towards 1926, expecting buyers to step in for a ride to the overnight high and 1938 key target above. That was the primary hypothesis I had outlined yesterday. Here it is. So this is what I'd outlined as a primary hypothesis. So the market did just that. It did push a lot lower than expected, so this was not a fun long to take. It pushed, rolled over, pushed deeper into Wednesday's profile. The next level down I had was 22.25, key LVN from this day, and it went to 21 even, which tested the high volume node of Wednesday. It found buyers, but when it did, nice big 6-point rotation, a 2-point pullback, 4 points back up, brings us back into the opening swing. In general, this is, I have not updated the study in a while. Statistically, once we move away from the opening swing by the size of the opening swing and go back in, generally we test the other side. It's kind of like that 80% rule for the value area. See that same action in the opening swing, and that's why I track it. The opening swing just tells me where the initial buyer stepped in to put in the opening swing low and where the initial seller stepped in to put in the opening swing high. It's not a time-based range. It's based on the price action itself. Once we pushed into the opening swing, pull back to the opening swing low by a tick, and boom, 11.75 points without a single 6-tick pullback, all the way up to 1938.25, just a tick above the 1938 key price that I had, key target, measured move target that I had outlined. Actually been looking at that for 2 weeks now, and it's finally here. Pulls back to 36.50, pushes to 40, 36.75, and then we're stuck here for the rest of the day. And then the point of control was pulled from 27.25 right here, and it pushed right up to 1938.50. So that, to me, that shows that there was participation at that level. ES moved to a 1938 target and built a VPOC right at that price, confirming active participants at that level. Decent volume delta on the way up. Some pretty good volume delta on the way up. Confirming that as price moved up, there was participation on the offer, lifting the offer, which meant that which could indicate that as prices moved up, participants did not mind these higher prices and therefore kept accepting them higher and higher and higher. Trend day type with a higher point of control and continuing acceptance of higher prices. So overall, higher point of control, higher low, higher high. The bull trend is in full control here. Nothing really new for anybody who's been watching the market for the last couple months. It just does not give the sellers a chance. Okay, so that's what happened yesterday. We left behind. It's very unusual, by the way, to have an 11.75 point rotation without a 6-tick pullback. The statistics on that are very, very, very small. So it's just unusual action here. Higher time frame stepped in and took prices up without any regard to time at all or anything. It just pushed right up, and then the spigot got shut off at 1938.25, as I showed. This is a higher time frame participant here pulling off this kind of a move. Okay, this is not day traders. Day traders came back in this region here. So what else? I'm eyeing out this this 36.50 down to 29.75. I've outlined that in my notes. This is a stem area. If you look at the market profile, you'll see that's action with a single print right at 29.75. So any movement below here, given the trend, may not get very far, but any movement below here would target 29.75. Any movement below 36.50. This market, though, has been it tends to push through this 36.50, for example, and get down through 36.25. It might push through by 4 or 5 ticks before it finds buyers back up. It has not been solidly auctioning key areas, and that's just the way the market is right now. We just certainly, it's part of our job. We just have to adapt to what is in front of us rather than what we want to see. Let's look at the overnight session. Very, very, it's just completely sideways on the overnight. We had a perfectly distributed, normally distributed profile overnight with a point of control right where it's at 40.50, right on the edge of yesterday's high. Tested both sides. There's really nothing to glean here from the overnight session. Market broke higher on the non-farm payroll, but it seemed like the worst reaction of non-farm payrolls I've ever seen. Even though the non-farm payrolls came out better, slightly better, 217,000 versus 215, with 6.3 versus 6.4 for the unemployment rate. Generally, we do get some volatility. We still get some movement, some shuffling. You know, those who are sitting on the sidelines and waiting for the number will step in, or those who expected a higher number might step out. You could have a higher number. You could have it at 217 and see it 10 points below because it's not 240. But today, it took forever for a reaction to happen. I was watching my dome, and here's where the number came out right here. The number came out right here, and it just pushes to 41.50 for a small double top here. Pull back to 40, push to very slow, very incredibly slow. I don't know what the explanation for that is, but there's just no participation really. The overnight session overall has had little volume. We're approaching what is normal volume here as we get into 8:30, the 8:30 open. 225,000 is the 20-day median volume for the overnight session. We're at 220, but really there's no price discovery at all. So you would think that with very little price discovery and a little push up that buyers are exhausted, but that's not the case. That's what's been pulling in these shorts, as they see that buying's happening on very little volume or on a negative delta, and so they step in and get whacked. So here we see prices moving up and up and up and up and up and up, with the delta moving down and down and down. And this is a tick delta. I'm retaining 120 days of tick tick data, and as price moves up, you could see very clearly that the delta, or the amount traded on the offer as the market's buying up higher prices, is falling and falling and falling. So there is a delta divergence here, but it's been divergent since last, November, I think, November or October of 2013. It's been diverging, and it's been sucking in people on the short side, and they're helping push the market up as they cover. That's what I believe is happening. Note that the I don't have the chart up here, but note that the dollar index is lower than where it was pre-ECB announcement. When the ECB announced, the dollar shot up, the euro shot down, and just about 15 or 20 minutes after Draghi stopped talking, the euro took back all of its losses and is actually higher. The dollar's pushing the 80 mark, trading at $80.39 right now, and it's pushing lower, which is also odd. You would expect, I think now it's between the LTROs and the other programs, 570 billion euros coming into the market. So it's interesting to see that. Let's move on to the primary hypothesis. I really don't have too much for you here. This is more rinse and repeat type stuff. We are, what I think from an auction perspective, is in the we're in the stratosphere here. We have a lot of structure beneath us. I was on daytradingradio.com yesterday speaking about this. We have a lot of structure beneath us that does not represent a strong foundation. If we look at the composite, it's blocked here a little bit. Let's look at our value chart. So if we look at the composite here, the normal reaction, the normal auction process for a strong move is a lot of consolidation. We got that here. So when we were trading around the 1864.50, I kept saying the trend is higher. This has got plenty of energy. We've been in balance for a long time. The expectation is for this to pop through, and for the move to be fairly decent. And we did get that. We had a pretty good amount of consolidation and balance, as you could see from February 14th is the day. We've had a fair amount of trading occur in a pretty small area for that period of time, and that volume is a good foundation for where we are now. However, since then, when I zoom into these profiles, there's very little here on the composite to lay to really use as a foundation. There's very little accumulation or buildup of energy or coiling or spring loading, and there's so many terms for what I'm trying to say. Just consolidation to then give us a strong break higher, especially in new high territory. It's a concern for me. The composites is showing you that there's some consolidation between 24 and the 1350, I believe it's down here. Yeah, 1350. There's some there. There's another distribution from 1350 down to that 1305 quarter. There's nothing between 1305.50 to 1899 and a quarter, completely untested. But there's just a tough area here to really feel like you're standing on solid footing for the long, even though the market keeps pushing higher. So this is a kind of a bubblicious type of market, and it's behaving this way. This reminds me of when I was trading the dot-com stocks in 98, 99. It's just like, it just seems like, well, it's going higher, better buy, and there's doesn't seem to be much of a pullback or much of an auction before the move up happens. I'm not a bear. I don't take sides. I don't really care which way the market goes. I really don't. I'm just a day trader. I'm not an investor. And the thought here is that when you have a two-way market that kind of moves into new territory, balances, coils, checks prices below, and then starts to turn up, then you have new high territory built on something that I think is substantial. And what we have here is just continuing to seek prices higher on very, very light volume, and it's just kind of running on its own power type of thing. Anyway, I'm just expressing a concern. I'm not saying that it's overdone or whatever. I'm just saying that I'm not seeing, even from an auction perspective, not just from a price action perspective, from an auction perspective, it is just not building a strong enough foundation for these higher prices. Hence, when it starts to roll over, and it will, when it starts to roll over, I think it could zip through a lot of prices very, very quickly, because there just isn't as much holding this thing up as you would expect in a normal rotational upward skewed market. As I said, the long-term trend is up, the intermediate trend is up, and now the day trend is up. So there's no question that we're in a bull market. I'm not fighting that. However, how it's forming the bases and how it's exploring prices higher is not as it's not as strong, and it's not as easy to read. It's a difficult trade. So if you're having a hard time seeing this for what it is, or feeling frustrated, or starting to look outside of yourself for answers, who can give me answers, who has the system, who has this, really it's tough for everybody. It just is. Okay? So I'll leave you with that thought. I want to remind you again that it is Friday. There are no numbers left for the day, so the market's moving under its own power here. We did get a good push yesterday, so it could pull back. It could pull back and start exploring below that 1936 and a quarter area down to 29.75. I'd love to see that. Just to give us some two-way action, give us something that's more tradable. But it is Friday, going into the weekend. Again, I'll remind you not to stake too much of your not to risk so much on a day like today, and then walk into the weekend with what seems like an insurmountable hole in your account, and just being a grouch all weekend with family and friends, and having to simmer that through until you show up on Monday. It's just not fun doing that. I've done it many times, and it's just, I tend to be more cautious as we go into Friday afternoon. A lot of traders leave early. It's beautiful here today in Chicago, and I'm sure it is in New York as well. People are going to want to go and start their weekend early, so don't stake too much into these trades. As always, watch your risk. Risk comes first. Without risk and a risk plan, you're just a gambler. Good luck.